Hello traders, it's Friday, August of 18th, and this is Alan Hong, market analyst of GKFXPrime. I'm gonna share my daily analysis through this video, and first of all, let's review the major market movements. So the first instruments here, we are referring to the dollar index in 4-hourly charts. So the US dollar index, which measures the greenback's rank against a trade basket of 6 major currencies, it was traded higher against a basket of global currencies on Thursday. So it was rose by 0.12% to 93.52 as the White House quashed rumors that National Economic Council's chairman Gary Cohn was set to resign, while upbeat jobs and manufacturing data lifted the sentiment. So the dollar resumed its climb after pairing early gains, as the White House official said Cohn is focused on his responsibilities as NEC director, and any reports to the contrary are 100% false. So following a tweet, sent from an unverified news account suggesting that Cohn was set to resign. So also adding to positive sentiment on the greenback were a pair of upbeat economic reports on initial jobless claim and manufacturing activity, so which suggesting the US economy is on track for solid third quarter growth. So initial claim for state unemployment benefit dropped 12,000 to a seasonally adjusted 232,000 for the week ended August 12. So the label, this according to the labor department. So this result was beat the economist's forecast of a just 4,000 declines. And on the manufacturing front, the Federal Reserve Bank of Philadelphia said that its Philly Federal Reserve Manufacturing Index rose to a seasonally adjusted 18.9 for August, and this was compared to the consensus estimates of 18.5. So the rebound in the dollar came after it slumped to a session lows on Wednesday, as the sentiment on the third rate hike later this year was sore, and after the minutes from the Federal Reserve July's policy meeting indicated that Federal Reserve members were divided on the outlook for inflation and monetary policy tightening. Meanwhile, the euro was felt against the US dollar to a 3-week low of 1.1662 after minutes from the ECB's July policy meeting show officials warned that the recent surge in the euro could hamper the central bank's efforts to get inflation closer to its target of below but close to 2%. As for commodities markets, the gold price was traded near season highs on Thursday and rose $7.66 or about 0.59% to $1,290.51 a troy ounce after the minutes of the Federal Reserve July meeting show members were concerned about raising interest rate amid a slowdown in inflation and narrowing investors' expectations for a third rate hike later this year. So the minutes of the Federal Reserve July 25 to 26 policy meeting on Wednesday show some policymakers believe the Federal Reserve could afford to stand pat on further rate increase until it is clear the trend of soft inflation is transitory. So that's the somewhat dovish minutes dampens the investors' expectations of third rate high later this year, and also underpinning the move higher in gold futures. So a gold price is sensitive to move in US rates, which leave the opportunity cost of holding non-yielding assets such as buildings. But gold price, however, struggled to breach around $1,300 as initial jobless claim and manufacturing data top focus and lifting the sentiment of the strength of the US economy. And the oil price with the West Texas Intermediate crude price was rose on Thursday and was 31 cents or 0.66% higher at $47.09 a barrel as the renewed attention was put on US oil stockpiles after industry reports suggested oil inventories at the Cushing, Oklahoma hub were declining. So in the latest week of August 11th, for which government data was available, crushing inventories increased nearly 700,000 barrels. So inventories in the United States are closely watched as the market grapples with a global supply glut. And according to the Energy Information Administration, the EIA data show commercial US crude stocks have fallen by almost 13% from their peaks in March to 466 millions and 500,000 barrels. So stocks are now lower than in 2016. So the US oil output, however, is rising fast as shale producers take advantage of a recent increase in prices. So US crude production rose 79,000 barrels per day to over 9.5 million barrels per day last week, and which is its highest level since July 2015 and 12.8% above the most recent low in the middle of 2016. According to the Director of Energy Futures at Mizuho, Bob Yogel said yesterday, the production number trumps the storage numbers, but it was still a draw of 9 million. There are some weaker shots that they probably sold out and they want to get out. So rising US output has been undermining efforts by the Organization of the Petroleum Exporting Countries, the OPEC, and other producers including Russia to drain the global fuel glut. So they have promised to restrict output by a total of 1.8 million barrels per day between January this year and March 2018. So according to the William O. Loveland at Rifkin Securities, said that if inventory declines continue at current pace, US stocks will fall below the 5-year average in 2 months. And he added the pace of the declines indicates that the OPEC production cuts are having an effect. So although the current oil price suggests that the market is skeptical about the long-term prospect for rebalancing of the oil market. So now we're gonna review the highlighted economic data and events that on yesterday, as well as the focus data and event for today. So yesterday, Australia was released its employment change for July, and it was at 27.9 thousand, okay, which is better than the expectations. And during the European trading hours, United Kingdom was released its retail sales for July, and it was at 0.3% growth, which is slightly above the expectations of economists. As well as the European was released the consumer price index, which also referred to the inflation reports of the whole European Union, and it was remained the same and meet the focus of 1.3% growth. And during the North American trading hours, United States was released the Philadelphia Ferris of Manufacturing Index for August, and it is better than the expectations of 18.9. Okay, as for today, later tonight we can focus on the data which released by the Canada. We show the core consumer price index for July, and it is expected to remain the same at 0.1% growth. And beside of Canada, United States, we're going to release the Michigan's consumer sentiments for August, and it is expected to be slightly battled from previous 93.4 to 94. So the last data tonight is the US Baker Hughes oil rig count, which expected to indicate the supply levels of the crude oil in United States. And now it's the technical analysis sessions. So first instruments, we are referring to the GBP USD in 4-hourly charts. So the pair will remain traded in a downtrend, but currently is ranging between 1.28500 and 1.29000. So the both movement lines in the MACD indicators were pointing upwards, and additional with the weak momentum near to zero level signals to be continue ranging in short terms. But however, both ML lines, the moving average lines, remain expanding downwards, so that's a price closure that's below 1.28400 will suggest to drop further along with the downtrend, and the next resistance levels we can refer to 1.27400. While the euro remain traded as an uptrend against US dollars, but currently it remain ranging between 1.17000 and 1.17700. So the both movement lines in the MACD indicator were moving flat, and additional with the momentum was weak, which near to the zero levels. So it's a signal for the pair to be remain ranging in short terms. But however, the both moving average lines were expanding downwards following a formation of death cross, so apply a price closure that's below 1.16600 suggests to retrace further and move lower towards the next support levels at 1.16100. And the Kiwi against the US dollar pair remain traded in a downtrend, but currently is in a retracement period, so the price was bounced within the both moving average lines, signal to be remain ranging in short term between 0.72300 and 0.73200. So a price closure that's below 0.72700 suggests to drop further along with the downtrend, and the next support level we can refer to 0.72300. Meanwhile, the Aussie was traded in an uptrend as well, and the price has failed to close below Fibonacci retracement level at 50, so indicated that the continuations of uptrends. But however, the pair will lack of momentum to move higher in short term due to the failure of closure above or below resistance or support levels. Thus, it is expected to be ranging between 0.78900 and 0.79300 in short terms. And a price closure that's above 0.79700 it signals to move further higher along with the uptrends. So the next resistance levels we can refer to 0.80600. As for the Japanese yen, it was remain traded in a downtrend against the US dollars, and the price has fell below the both moving average lines again, signal to continue its downtrend and drop further. And the next support level we can refer to 108.800. Gold price is remain traded in an uptrend, and the yellow metal price remain traded within the range between $1,270 and $1,289 a troy ounce. But however, the both moving average lines is continued expanding upwards, additional with the both movement lines in the MACD indicators which expanding upward as well, so a price closure that's above $1,292 is signals to continue its uptrends and go further higher towards the next resistance level at $1,300 a troy ounce. And the oil price with the West Texas Intermediate in 4-hourly charts is still considered uptrend, but currently is retracing, so the price fell below the support level of $47.20 and currently ranging between $46.70 and $47 a barrel. So falling below Fibonacci level of 50 suggests for a change in trend directions to become downtrends, and the next resistance level we can refer to $45.30. That's all for my analysis to date. Please don't forget to subscribe to our YouTube channel by clicking the GKFXPrime logo on the screens in order to follow our updated analysis and education video. Thank you for watching.
GKFX, your global trading partner.